Welcome back. We're looking at an incredible framework today. 101 Self-Coaching Lessons for Traders. It's all about psychological mastery for better performance.
A really remarkable blueprint.
It is. So let's just dive right in and see how we can sharpen its focus, maybe increase its immediate utility.
Okay.
The first thing that really stands out is this dual focus. You have the trading strategy on one hand, and then this much broader, universal life prosperity idea on the other.
Right. And the link between them is powerful. That successful trading comes from self-mastery. That's a great message.
But the way it oscillates between the two, it risks diluting the call to action for a reader who's in a hurry.
I see that. The weakness is that the vision is just so broad. I mean, the goal is stated as not just to make money, but to prosper in all of life's undertakings.
Which is a beautiful goal, but then you get a lesson on, say, anticipating market volatility right next to an assignment to read Ayn Rand's The Fountainhead.
That's a huge cognitive leap.
It is, especially for the person this is aimed at, the one accessing this daily coach right before the market opens.
That's the key context, isn't it? That specific moment of consumption. You know, the material says a lot of people read this during the hour or so immediately prior to the market open.
Exactly.
So at 9:15 a.m., you need a combat-ready checklist, not an existential deep dive.
If you're forcing them to switch from tactical prep to philosophy right before the bell,
You lose that functional edge. The whole thing becomes less useful right when they need it most.
you're trying to serve two masters at once, the pre-market performer and the lifelong learner. And maybe neither gets the perfect experience. So the suggestion here, I think, has to be about ruthlessly segmenting the material. We need to clearly differentiate what's for immediate performance and what's for, long-term growth.
Minimize that switching cost.
Yes, we have to define the utility for them right in the moment. So for concrete examples, you could visually designate trading cues from life cues.
Different icons, maybe? Or even just different colors? Something simple.
Perfect. So less than 4. Changing your physical environment to break a bad habit. That's a hard trading cue. It's actionable right now.
That should look totally different from, say, Lesson 22 on Aristotle and fulfillment, which is great stuff, but it's for Sunday afternoon, not Monday morning.
Exactly. But what about the ones that blend both? The lessons that argue self-mastery helps in any field. We don't want to lose that.
No, you don't. For those, maybe you use a distinct subhead or a call-out box.
Like an apply to trading box.
Yes. So if you're talking about patience in parenting, you immediately follow it with a box that says trading implication. Patience here means waiting for your high probability setup.
You isolate the trading takeaway, so the user can grab it and go if they're in prep mode, or they can dig deeper if they're in reflection mode.
Exactly. It honors the big vision, but it maximizes the immediate utility.
Okay, I like that. So we've segmented the material for the user's schedule. But what about the actual mindset they need when they sit down to do the coaching?
Which brings us to the second big opportunity, leveraging these distinct psychological roles to structure the self-coaching itself.
Right. The material already introduces these really deep modalities: psychodynamic, cognitive, behavioral.
It does, but we can use them even better by explicitly defining the skill sets the reader needs when they put on their coach hat.
Because being your own coach is, well, it's a fantastic idea, but the author is asking a lot. You're supposed to fluidly switch between these huge analytical frameworks.
1 minute you're connecting your trading anxiety to old relationship patterns. The next you're trying to condition new behavioral responses.
That's a serious cognitive lift. It's grounded in real psychology, but it's a heavy expectation if the roles aren't really, really clear. It's like being asked to be a surgeon and an engineer at the same time.
And the material itself is so advanced. I mean, the core argument is about this continuous discipline change. Lesson 36 makes a great point. When you find one pattern, like anxiety, that causes multiple problems.
Like missing trades or violating your stops.
Right. That becomes your core focus. But even just identifying and analyzing that core problem requires the right tool, the right lens.
And the framework gives you 3 very different toolkits. So the suggestion is to formalize the self-coaching process as applying distinct expert identities.
Let's give them names, formalize the roles. We're thinking something like the dynamic analyst, the cognitive restructurer, and the behavioral scientist.
I like that. It gives a self-coach a mental blueprint. They know which tool to grab for which problem. It turns an abstract idea into a role they can step into.
It's actionable. It gives them an identity to adopt. So let's walk through it. How do we tie the existing lessons to these new identities?
Well, when you're addressing those deep, recurring psychodynamic patterns, the whole flow of need, feeling, defense, repetition.
You can instruct the self-coach to use that flowchart explicitly as the dynamic analyst tool.
Right. The dynamic analyst is the one who asks, where have I seen this pattern before? How does my need for certainty here mirror a need for control somewhere else? It becomes a structured, diagnostic procedure.
Absolutely. And then for the more day-to-day battle with negative self-talk, that's the heart of the cognitive approach.
So for that, you mandate the Socratic debate structure from Lesson 58, where you really rigorously challenge your own automatic negative thoughts.
And the key is that the cognitive restructure identity must use that 4-column journal: situation, automatic thought, emotional response, and rational response.
It's a systematic way to challenge those negative patterns, a specific technique for a specific identity.
And then finally, for the action-based changes, the observable stuff, that's where you bring in the behavioral scientist.
The experimentalist. This role is about designing those incompatible states from Lesson 66. It's a physical intervention.
Yes, like using slow, deep breathing to counter excitement, or proactively practicing relaxation before the market even gets volatile. That's a clear, physical technique from the behavioral toolkit.
By defining the roles, you give the reader permission to stop trying to be one perfect coach and start applying 3 distinct expert skill sets.
It just reinforces the whole structure perfectly.
Okay? So now let's move from the internal to the external, to the metrics, the data. Our third big point is about elevating data analytics from just a psychological coping tool to a mandatory competitive edge.
This is a core strength of the framework. It promotes all this intensive research, tracking your average win-loss, your variability of daily returns.
But the weakness, as we see it, is that it frames this data work primarily as a psychological coping mechanism.
It's an internal management tool. I mean, it links the effort directly to mood, saying things like, that taking of control is a powerful antidote to trading distress.
So the data work starts to feel like a very sophisticated form of journaling. It's designed to regulate your confidence, your anxiety.
Which makes total sense, but is there a risk we're leaving something on the table? That focusing only on emotional control understates the hard, quantified business necessity of this data.
The reader is told to earn increases in trading size, but then the research steps are just framed as ways to generate hypotheses.
Not as the fundamental engine of profitability.
Exactly. It uses that great business metaphor of running a coffee shop, but when it comes to the numbers, it pulls back and treats them like emotional stabilizers.
You are absolutely leaving money on the table if you only treat data as a way to cope.
I can see that, so the suggestion is to elevate all these practical data analysis techniques, the Excel charting, the sorting, from a self-knowledge tool to a mandatory continuous competitive audit.
It has to be about finding a unique, demonstrable edge.
We need to make these data tasks feel less like reflective homework and more like essential R&D for a hedge fund.
Right. So for concrete examples, instead of just using the tools to manage your mood swings, you instruct the user to use Excel sorting from Lesson 96 to isolate the last 5 times a pattern occurred.
And why?
To determine if a fundamental market shift is happening that needs an immediate tactical change.
That's operational, not emotional. You're using data to attack the market, not just manage your feelings about it.
And we have to bring that business focus back in, hard. You mandate that the reader uses the contextual investigations, not just for general understanding, but to identify the precise market niches where their quantified edge is strongest.
So if your data says you only make money on Tuesday breakouts in utilities futures, then that is your business, that's your edge. And the research should be about confirming and then ruthlessly exploiting that niche. It operationalizes that idea to stick to what you do best and ignore the rest.
And finally, you have to emphasize that the research isn't just to build confidence. It's to disconfirm market lore and find what provides a quantifiable edge.
That makes the huge time commitment feel justified. It's not just self-help, it's business development.
A really robust critique, I think, for what is a very developed piece of work. The foundation here is just incredibly solid.
It is. The connection between psychology and performance is beautiful. So today, we really focused on 3 big opportunities to strengthen this self-coaching approach. First was defining that dual purpose through clear segmentation.
Second was formally adapting those distinct psychological expert roles to simplify the cognitive load. And third, elevating data analysis into a mandatory competitive business audit.
And the key actionable suggestions are: 1. Segment into trading cues versus life cues. 2. Adopt explicit identities like the cognitive restructurer to guide your work.
And 3, use your quantitative tools like Excel sorting to exploit market shifts, not just to manage your internal mood.
We can absolutely see what you're striving for here, which is maximum self-mastery through structured, evidence-based introspection.
And we think these refinements will really maximize the material's utility for the active trader. Ensure they're applying the right tool at exactly the right time. We encourage you to reflect on these points and submit your refined framework back in again for another critique.